Hello everyone, welcome back to my YouTube channel and I hope all of you are doing great. So I'm posting a video after a very long time, after 3-4 weeks because I was busy with my exams which are currently going on. So wish me luck for the exams. And this is not going to be the typical that weekly index review video. Today we're gonna learn about the chart patterns and specifically about the horizontal or the rectangle chart pattern. We're going to learn about everything, how the patterns are formed and what are continuation pattern, what are reversal pattern, and how horizontal pattern work as continuation or the reversal. And we're going to take a look at some other patterns also, but not in much detail. uh, we're going to talk about this horizontal pattern, which is one of the best and the easiest pattern for any beginner to practice. So before starting the video, standard disclaimer: I'm not a SEBI registered analyst, and any stock discussed here is not a sell recommendation. Please consult your financial advisor before taking any trade or making any investment. So let's get right into the video. First, let's learn about what are chart patterns. So let's go to Investopedia, which is the Bible for any investor or the trader. You can find all the meaning of all the terminologies used in the stock market or in the financial market or in related to finance. Anything you can find here, literally everything about finance. So we're going to take a look at what are basically the chart patterns are. So patterns are the distinctive formations created by the movement of the security prices on a chart and are the foundation of technical analysis. So you know the the most basic unit of technical analysis is your the price and the candlesticks. As you can see here, these are called candlesticks. Most of you, I assume most of you know what are candlesticks, and the chart patterns are basically the movement of the price relative to time, how the price moves. So these are classified as chart patterns, and we have categorized them in different on the basis of certain formation, like a price has to move in a certain way to make it qualify as a pattern. Like in this case, as you can see here, we have opened the chart of the supply. As you can see in this case, this is called the rectangle pattern or the horizontal pattern because the price is just consolidating, or you can call it accumulation or the consolidation phase. You know about the three phases of the market: the uptrend, the consolidation phase, and the downtrend. So when the price starts moving sideways, or neither the buyers are dominant nor the sellers are dominant, and price is just moving in a range, that is basically your consolidation phase. So this is your most typical and the most typical type of pattern, which is your horizontal pattern, one of the most easiest. In this case, basically the price moves in range, between a range, as you can see here, between two horizontal lines. As you can see here, the price again and again faced resistance at the same level of 1000 to 1005. Just five. uh, Support and resistance is never a straight line. It's always a range, about 10 to 15 points range. It's always a range. So when price moves in within a range, as you can see here, between this 870 and 1000, so this is basically qualified as your horizontal or the rectangle pattern, in which the price is moving between two horizontal support and resistance lines. So how to interpret this pattern? So basically, first you have to take a look at the prior trend. That is very important because the prior trend tells if this is a continuation pattern or the reversal pattern. Not exactly the prior trend, but the breakout tells if this is a continuation pattern or the reversal pattern, because the it can either break on the upside, as in this case you can see here, or it can either break on the downside. So as you can see, the price was in a very strong uptrend since the March. As you can see here, it was in a very strong uptrend, and since April 2021, it just started consolidating in a range. As you can see here, it started consolidating in a range since April, and it has been moving in this range of like 200 points, not exactly 200 point, 130 points range between the 1000 and 870. And uh, at one time the price went below this range, which typically is called the shakeout. There's a concept of shakeout which is there for when the price suddenly breaks the support level and after very next day or maybe after 2 3 days comes back within the range after hitting the stop loss of all the traders. That is basically done by the strong hands to uh, get the weak hands of the stock, because weak hands are basically like you and me, the retailers which are holding stocks in small quantities for a very short time, to get those weak hands out of the market. This shakeout happens because in typical horizontal pattern, if one knows how to trade it, they will buy at the support. There are two ways to trade it: either at the breakout or the breakdown, or with at the support and sell at the resistance, or maybe sell at the resistance then again buy at the support, which is the short selling way. So typically, who knows how to trade it will place his stop loss right below this resistance, sorry, the support level of 870, because one assumes that the price will not come down, as this is a very strong support and will show a reversal. But then suddenly price comes down and your stop loss would be around this level and it will violate that stop loss, and then again went back in range, and after 2 3 days, sorry, after a few weeks, as you can see here, the price again broke out, frustrating the trader who got out after triggering their stop loss. So the two ways to trade such pattern: either you buy at the support and sell at the resistance, or sell at the resistance, buy at the support, or you wait for the breakout, like here in this case. And how to calculate the target? The calculation of target is really simple. You just have to calculate the length of the pattern vertically, and that is basically your uh, that is basically your target level from the resistance level or the support level. If in case the stock breaks down, then your pattern would come on the downside, and it breaks on the upper side, then your pattern comes on the upper side. As you can see here, the total range of this rectangle is around 136, and that is your target price from the resistance level, that is from 1005. So as you can see, it has given a breakout, although right now it's facing some pressure. A little bit pullback is possible. As you can see here, pullback is on the lower volume as compared to the breakout volumes. The the pullback is on the lower volume, which is a very normal reaction. The price usually breaks out and then retests this level of the resistance, and then uh, moves someday for here at this level, or maybe starts heading higher. That is a good sign if it once touches this level and then starts heading higher, because if the breakout is real, then it won't test its previous resistance, which has now turned to support more than one time. So this is your typical horizontal as a continuation pattern. Here we have uh, I have started creating a chart book where I just that place all the charts, screenshots of the all the charts that I uh, always looking or trade, that I'm always analyzing or trade. If I find some pattern, I'll just post it here, and then after 2 3 months I'll review it if my analysis was right or wrong. You can do this, just screenshot the chart and you can paste it in a PowerPoint file or maybe some notes making app, anything you like. So this was the chart of Cipla that I posted, and it's currently at that level right now. This is another chart of the another stock, that is Narayana Hridayalaya. We're going to take a look at this right now. So here also, after a very strong uptrend, as you can see here, the price just started consolidating. This was the first horizontal pattern, and then a breakout as at this level. As you can see, a very strong breakout, and then it went again in consolidation since January 1st. It has been in consolidation and few shakeouts to push out the weekends like us, the small retailers. As you can see here, this is typically for the pushing out the retail traders, and then the price started moving upwards, and it again came down, a false breakout of just like the shakeout to push the weak hands out, a false breakout also happens to push those people, to trigger the stop loss of those people who bought after the breakout. So again the price came down, but this time it didn't tested its support, and because the buying pressure was high, and again started moving upwards and then a breakout. So here also we calculated the target same way, the vertical length of this pattern, and it almost touched the pattern only 5-6 points away from the pattern. That works, and now it's just fully back, as you can see here. Now this resistance level 675 has now turned into a support, and you can see the low long wick, which is a good sign, because the demand is there. It's showing that demand is there, although this big round uh, candle is not a good sign, but we'll have to see. As long as this 675 is held, this can again move higher and uh, reach the target of 729. So now let's take a look at the this horizontal as a reversal pattern. As I told you that the horizontal pattern is not only a continuation pattern, it also a reversal pattern. So between the difference between the continuation and the reversal is typical. Continuation is you have a prior uptrend, and then the stock just consolidate in a range, and that is basically called the accumulation phase or the sideways phase, and then again breaks on the side of the trend. If the trend is up, then the stock after consolidation breaks on the upper side and resumes the trend. Let's take it. Let's look at it with example. So this is the chart of the Larsen and Toubro Infotech, which is a great IT company. It has given very good returns, as you can see here. After the initial breakout at this level, after the initial breakout, it uh, kept moving up, as you can see here, very strong uptrend, and then it started consolidating in a range. As you can see here, the pattern I told you about, the typical horizontal pattern, it's starting within a range. This previous resistance was now acting as support. As you can see here, this was acting as support, and it was just consolidating in a range. Your horizontal pattern is just your typical range, and after that a breakout on the upper side, a very strong one indeed, and then the trend continuation. So this is your continuation pattern here, right here. This is your continuation pattern, and then after reaching a certain point, it fell down, which is a normal reaction. But then again, it again fell from the same level, and it formed a pattern named the double top, or you can call it the M pattern, anything you like. And after that, this break line, sorry, neckline, which was the starting point of this pattern, it broke it and then again started falling down, and now this line is acting as a resistance. As you can see here, again and again this line acted as a resistance. So this is the difference between the reversal and the continuation pattern. So we have here the Loris Labs. uh, where it formed a typical reversal horizontal pattern. So let's take a look at it from before. It was in a very strong uptrend, as you can see here. Then it started consolidating here, as you can see here. Again, a rectangle as a continuation pattern. You see here, it started consolidating in a range, then gave a very strong breakout with combined with very strong volumes, and then again an uptrend. And after that, it faced some resistance at this level. As you can see here, the price momentum started slowing down, and it started facing resistance at this level of around 700 to 720, and then it formed a pattern called the head and shoulder pattern, which we're going to take a look at in next few videos. And then once the neckline broke, it went down, and then since then it has been consolidating in a range. As you can see here, it started forming range. It made a base here, it stopped falling and made a base here, then again went up and faced resistance at this level and came down, and again then same there is faced the resistance at the same level and then came down, and then there was the shakeout, which I explained that to push the weak hands out of the market, the stock breaks the support level and then went back in. As you can see here, the stock breaks the support level and the candle retraces itself, and next day it opens gap down, and then a very big candle which recovered the losses of the previous day, and then again faced resistance at this level of 555. But this time it fell, but it didn't touch the low level that was around 450. That was the support of the pattern, and then again started heading higher and then gave a breakout. So what's the target here? Your, just like I said, to derive the target, just calculate the length of the calculate the height of the pattern, and that is your like 103 points. Yeah, so this is your target price once the resistance is broken. uh, so this is your target price. So that was it for today. We took take a look at the horizontal pattern, or you can call it a rectangle pattern. It is both a reversal or the continuation pattern, and see how to trade it. And we saw how to trade this pattern and how to identify it, if it's a reversal or a continuation pattern. So this was it for today's video. If you enjoyed the video, please consider hitting the like button, and don't forget to share and subscribe. Must share and subscribe. Oh, thank you. Goodbye.